Hi, this is Mark Hellwig with ValueCharts.com. Welcome to the webinar Transforming Simple Breakout into the Intelligent Breakout Strategy. Now, this is a very powerful way to trade the markets. I'm very excited to show you how this has the potential to make a dramatic impact, a dramatic positive impact in your trading. So without further hesitation, let's go ahead and dive right into the content relating to the Intelligent Breakout Strategy. Now, first and foremost, my background comes from the hedge fund industry for about 20 years now. I've been blessed to be a part of some award-winning hedge fund teams over the past 20 years, and I'm probably most noted for developing the value charts concept in many years ago and publishing a book called Dynamic Trading Indicators with John Wiley and Sons. So that's pretty much my background. I'm also a speaker at national and international events, including Bloomberg, Traders Expo, and many others as well. So that's my background. I'm very passionate about trading. I've been trading for a long time and have been really thinking about powerful tools that can help the average trader turn the corner to become profitable. And this is one of the most powerful ways of doing that, this intelligent breakout strategy. Now, it's important to understand that trading does carry a high level of risk. So you need to understand if you're trading, you need to do it with risk capital, money you can afford to lose. The reality is most traders do not make money. Most traders lose money. So make sure that you understand it is risky, and the money that you are trading with needs to be money you can afford to lose. Now, having said that, our goal as traders is to achieve profitability, and that's what we're going to be talking about tonight. I believe a very powerful way to potentially do that. Now, CFTC Rule 4.41 simply is stating that past performance is not necessarily indicative of future results. Understand that hypothetical results do have certain limitations and that they are not necessarily going to translate into future profitable results. Now, when we talk about the intelligent breakout strategy, what are we really talking about here? Well, the intelligent breakout strategy essentially covers three primary points. All right, first one, it's a very powerful tool to manage your trades. One of the biggest challenges for experienced traders and new traders alike is determining when to enter a market, when to exit a market, and how to manage your risk, where to place stops. This is a strategy that does that all for you. So I believe it's very powerful in that way. And we can talk about later on in a future workshop the idea that traders and people in general tend to do fairly well, or better, I should say, with the logic aspects of trading, like identifying trends, identifying key setups. We tend to be challenged as people with the more emotional aspects of trading, and that includes following the price discovery process and determining how to manage trades, where to enter, where to exit, etc. So this is why the intelligent breakout strategy is so powerful, because it's a great complement for traders who need assistance in that area. And I'm certainly one of them. Even after trading with hedge funds for 20 years, I need that type of guidance because I'm emotional as well. And I'm prone to make a decision with my own personal trading account that could be more emotional in the heat of the battle, and I don't want to do that. Now, the second reason or second idea here behind the intelligent breakout strategy is that the application of the strategy is not 24/5. We're not looking at turning on a strategy all the time and walking away. We're looking at strategically applying the rule-based strategy when we believe that there's a special opportunity for a market to either go up or go down in price. And so that's what the idea is. We don't want to apply the breakout strategy at all times, just in those certain special setup situations where the odds of success are stronger for us. Third point here is that we want to skew the parameters to increase the odds for success. What does that mean? It basically means that if we're bullish a market, we want the system to be more reactive on the buy side. If we're bearish a market, we want the strategy to be more reactive on the sell side. So clearly stated. Now, first question, let's dive right in here. Would you trade this strategy? Simple question. Now, you'll notice that it had a nice trade right here. So it looks like a profitable trade here. And then it had a couple of losers here. You can see we got in, got chopped up a little bit, but not, it's hard to tell whether this is actually a good strategy or not. But in general, it doesn't look like it's anything that's going to really knock our socks off. If you look at the equity curve here, it's fairly choppy. It's really, let me put a green pen up here, but fairly choppy and nothing super impressive here. You can see that we had a $3,000 peak to valley drawdown here, and that's fairly sizable for the amount of profits that we eventually do achieve. So this is not very impressive, and this is basically an optimized breakout strategy applied 24/5. So applied in all hours that the market is open, and this is a good example of why just looking at this at face value, we wouldn't see anything special here, but there is something special here. There's a special capability here that we want to take advantage of, and I'm going to show you how to do that in this webinar. Now, when you talk about tracking metrics, there's a lot of different metrics out there to track, all right, but there's only two, in my opinion, that are just critical, and those include percentage profitable. I'm going to circle this over here, percentage profitable. The second one is including the ratio of average win to average loss. Those are the two metrics you need to really watch for in your trading. If you manage both of these metrics well, you should have great results. Now notice here that this optimized strategy achieved a percent profitability of 34.29%, getting that straight off the TradeStation Performance Summary Report. Now, that means that it only had winning trades 34.29% of the time. Really, almost 1 out of 3 trades were winners. The ratio of average win to average loss was 2.7. That means, say for argument's sake, that the average loss was $1,000. That means my average win with the strategy during the testing period was $2,700. So 2.7 times the size of my average loss. So that's really what that is. Now, let's go ahead and take a look at some Excel examples here. I actually created an Excel spreadsheet here that can help us with understanding these ratios a little bit. Now, I'm going to go ahead and plug in my numbers. Let's pull those back up here. Let me go back. So 34.29 and 2.7. 34.29, let's plug that in. 34.29 for my percentage profitable and 2.7. Okay, and what this is designed to do is to give me some scenarios here. I created a randomizer that trades 100 times. This is designed to give me the potential scenarios of account growth or account equity curve in general. So this is not bad, certainly right here. Not terribly bad. Every time I save the spreadsheet, it gives me more scenarios. So not terribly bad here as well. I'll save it again. Not bad. Looks like a lot of profitable scenarios here as I continue to save the Excel spreadsheet, which recalculates the random cells in the spreadsheet. Now, this is not bad at all. It's really achieving profitability. Now, this is an optimized result here from TradeStation. The reality is we're probably realistically not looking at 34%. We're probably looking at something close to 25%, closer to 25%. And we're probably not looking at 2.7, but something maybe around 2. Now, this is the reality of trading. The optimized results are rarely actually achieved in trading. It's important to understand that. And we usually achieve something less than that. I can tell you from over 20 years of researching strategies, that's what I have observed. If we achieved 75% of what we tested, we really were fairly pleased with our results. But typically, we did not achieve the actual tested results, especially the brute force optimized tested results. So let's save this a couple times. Now, certainly take a look at this equity curve. This is not acceptable right here. I mean, we're basically looking at an account that's losing money, assuming our average loss is $1,000, average win would be 2. This is unacceptable. This means we're losing about $18,000 there. Let's go ahead and run it again. I'm going to press save again in my Excel spreadsheet. It's going to recalculate it. Again, losing $10,000. Very choppy, unacceptable equity curve. Let's save it again. Okay, I'm closer to break even, but this is certainly not a strategy that any of us in our right minds would ever trade. Okay, I'll save it again here. Again, losing money, losing about $10,000 on this. I'll save it one more time. Every time I save it again, it recalculates the numbers. This one, totally unacceptable here. We end up losing over $20,000 on that, assuming we're risking $1,000 per trade. Now, the idea here is that we are not going to leave this on 24/7. So we don't need to concern ourselves with putting a strategy on and making it perform in every single scenario that the market can throw at us. I think that is a much more challenging way of trading the markets. So what our goal is here with Intelligent Breakout is, let's not apply the breakout strategy 24/5. Let's not apply it to all scenarios. Let's strategically apply the strategy to the best scenarios that are out there. Okay, so let's say we're able to do this. Let's say, for argument's sake, that we apply it strategically and we're able to raise our percent profitable to 35% of the time. All right, and let's also say, for argument's sake, that we can raise our win-loss ratio to 3. Okay. Now, I can tell you from the hedge fund days that we had strategies that were upwards of 6 win-loss ratio. So it's certainly doable to do that. Percent profitable and 35% is certainly very achievable as well. But in general, we're not going to get those numbers applying the strategy at all times. This is going to be strategic application. Let me recalculate these numbers, and you can see now that my equity curve is really fairly good looking here. This is a great equity curve, and we can see that it's upward trending, and we end up making around $70-ish thousand right there. So very, very attractive there. Let's recalculate this again. We'll see a couple of scenarios. All scenarios are very strong, and you can see what we've done here. We've basically taken our percent profitable number here and increased that, and our win-loss ratio, ratio of average win to average loss, and made that upwards of 3, and then percent profitable upwards of 35%. Not stellar numbers, certainly very achievable, again, in my opinion. This is what we've done, and you can see that the results are stellar. So these are powerful numbers. It's about probabilities, and this really speaks to the idea that we want to make sure that we're very proactive in managing our risk and money management with our strategies. Let me recalculate it a few more times so we can really be convinced here. Now, this is a much less attractive simulation here, but still, it tells us that even in this case, it's choppy, we still made $20,000. So I don't think anybody's going to complain about that. This one did as well, $20,000. Had a $10,000 drawdown. Certainly not what we'd like to have, but sometimes we have losing streaks in trading. And you can see again, it made we'll call it $4,000. And then made about $53,000, and then you can see, last but not least, we made about $24,000 here. So very, very acceptable numbers here from this simulation. The Excel spreadsheet really shows us the power of improving the percent profitable and the win-loss ratio numbers. So just to drive that point home. Now, we've gone past the Excel examples. Richard Donchian, by the way, he's the guy that many think of when we think of breakout strategies. So if you're new to breakout, if you're new to trading, many traders look to him as the guy who made the breakout strategy popular. I don't know if he's the one that actually originally founded it or developed it, but he certainly is one that's a guy who's been noted for the breakout strategy and and the work done there. Now, the breakout strategy is a price movement through an identified level of support or resistance, which I say usually here, this actually should probably be, hopefully, is followed by heavy volume and increased volatility in the direction of the breakout. That's really what we're hoping for and we're after there, okay? Now, traders will buy the underlying asset when prices break out above a level of resistance and sell when it breaks below a level of resistance. That's what the breakout does. Let's go ahead and take a look at this here. Now, for a 3-bar breakout, you can notice right here, the way we calculate this is we don't include the current bar in our calculations. We're going back in time. So last bar, this can be intraday or end of day, previous 3 bars if it's a 3-bar breakout. So I'm counting back 1, 2, 3, and then I'm finding the highest high point right here. That's my high line right there that I identify. And then I'm also finding the lowest low point right here. That's my low point. So they both happen to be with bar number 2. And those are my breakout levels. So as soon as I break through this line, and I usually like to move it one tick below. So I want to see prices and the current bar break down through that and then go below it by a tick. As soon as that happens, then essentially I'm looking to take a short position in the markets in this particular case. Now, if we want to look at a 5-bar breakout strategy, you can see right here that the bar number 4 has the highest high. Again, I'm not counting the current bar, but I am counting back 4 bars, 5 bars, 1, 2, 3, 4, 5. Bar number 4 is the highest high. Bar number 2 has the lowest low, and the current bar has not broken above or below. So if we're a buyer, if we're looking to buy into this strategy, we are going to buy once we see prices essentially, maybe I make a blue writing here, essentially break up above this level plus 1 tick. So I take this level, add 1 tick to it. That's when we're going to enter a long position. All right. As a buyer, as a seller, we would do it when it breaks below the lowest low here from the last 5 days, minus 1 tick. So that's where we're going to become a seller if we're looking to sell the market. And I'm submitting to you with the intelligent breakout strategy that we have a clearly defined expectation for either becoming a buyer or a seller. Last example here, this is a 10-bar breakout period, and you can see here that counting 10 bars back, bar number 6 looks like it has the highest high. That's how we establish our high line. And then bar number 3 looks like it has the lowest low line there. Okay, that's where we established our low line there, our red line, okay? So that's essentially what happens there, and that's how we calculate those lines. And then we're looking for the current bar does break. So as soon as it breaks that high level plus 1 tick, we are looking to be buyers there, all right, according to this strategy. All right, so that's a fairly straightforward, and that's how that works. Now, the intelligent breakout here is basically, there's pros and cons with it, okay? Now, the benefits of using the intelligent breakout strategy are as follows. The nice thing is it ensures participation in major moves. That's why I really like the breakout strategy. What does that mean? That means some strategies have filters in there where for some reason they may not actually trigger a buy signal if you expect the market to go up. And you're right, okay? Let's say you expect prices to go up and prices really start to take off the upside. The breakout strategy is going to ensure that you're participating and that you're actually long when that breakout occurs. Just by pure and simple design, it ensures participation. The breakout strategy is also very easy to understand. This is one of the things I really like about it. I just explained on the previous slides how it works. Very easy to understand and very attractive from that perspective. Number 3, will not hold positions against the trend. So let's say we're dead wrong. We expect a market to go up and prices start really falling off here. Then the great thing about the breakout strategy is we may never get in. So if we have a green buy line up here that never gets hit, prices fall away, then we never actually get in. And let's say for argument's sake that we actually were long the market. At some point, once it breaks our sell line, then we're out. So it has an uncle point, and it does a super job of keeping us out of moves that we're dead wrong about. So will not hold position against the trend. Very powerful and nice benefit there. Now, and with respect to the cons or the negatives, the breakout strategy in general can be vulnerable to false breakouts. It just does by design, has a lot of these, and that is a downside to it. But again, the whole idea of what we're talking about here is that we're not looking to apply this 24/5. We're looking to apply it in special situations where we think the odds are in our favor to either take a long position or a short position. But if you leave it on all the time, you will find that it is vulnerable to false breakouts, and that's why a lot of people just don't use that as a 24-hour strategy. It has very average, unattractive reward to risk ratios when you leave it on 24 hours a day. It's not stellar whatsoever. Does not enter market strategically. The reality is when you have your buy line, and then you have your sell line, and then you have prices. As soon as we have a rally in prices, typically we're short-term overvalued once we finally hit that or generate that buy signal right there. Or if vice versa, if we sell off and we break down through the sell line and we're looking to get short, we're short-term undervalued there. It's important to understand that. So that's essentially a negative. And what happens typically is that when you have these let's say you have a buy line and you have a sell line, that a lot of times the market is going to rally up through. Let's say I'm looking to buy, and let me paint my top line green here, make it easier for us to look. When we finally do penetrate that, it's not unusual for the breakout, the markets to kind of correct back against us. And even if we end up being right, it oftentimes with the breakout strategy, we do have a period of unrealized losses just because we're buying overvalued short term. Just important to understand that as well when you trade the breakout. Now, in terms of the notes, the things I want you to be aware of, it's not an all-weather trading solution. Breakouts are not. Do not think that you're going to leave this on 24 hours a day. You're going to get chopped up, and it's a very average at best, and I'm saying at best way to trade the markets as a full-time 24-hour solution. Not advised to do that. It can get chopped to death if not calibrated correctly. So it's important to understand there's a skill in selecting your parameter sets with this. Generally, buys overbought and sells oversold. You need to know that. Does not enter markets strategically. Okay, and you may say, okay, Mark, well, why are we looking at this if it doesn't enter markets strategically? The reason why is because we do that ourselves. We turn it on during very attractive setup periods to increase our probability for success. All right, so understand that that's what we do as traders. It's completely ineffective in some environments, the breakout is. And we're not interested in having this as a 24-hour solution. So the idea here, again, is to try to identify and get good at identifying the more attractive environments. And it's a lot easier than you think. It does require skill and study, but it's very achievable. Now, in the right environment, the breakout strategy and the intelligent breakout strategy can be very effective. Now, how do we transform the breakout into the intelligent breakout? First of all, we want to find a strategic trade setup on a longer-term time frame. That's what we want to try to achieve. So find that setup on a longer-term time frame is step number one. We want to apply the breakout strategy to a shorter-term time frame. So if I'm looking at my setup on a weekly chart, then I'm probably going to look at my actual time bars, my bar intervals to be less than that, possibly daily, possibly intraday. If I'm looking at a daily setup, then I definitely want to use intraday bars to manage my breakout strategy. Now, we want to modify the parameters for directional bias. So a lot of people think of breakouts as being symmetrical, like 10 bars to the upside, look back period, 10 bar to the downside, look back period. We don't want to do that. We're not interested in doing that. Okay, we want to have a directional bias in our parameters. And the way we do that is by selecting a more reactive, call it a more reactive period for getting in the direction that we want to go. So if we're looking to be a buyer, we want a shorter look back period on the buy side defining our buy line. And if we're looking to be a seller, we want a shorter, more reactive period on our sell line. Does that make sense? Once profitable, we want to lengthen the parameters for the exit. This deals with the exit, all right? If we want to ride a longer term move, this is a really nice benefit here of what we can do in strategically adjusting our parameters. Risk a small amount of money for a large payout. The way we do this is, again, we get good at finding setups, which we can do. The logic side of our brain is that's a non-emotional event. We can develop the skill to do that, so very achievable. And then we can back out our transfer or control, if you will, to a longer term time frame once we achieve a degree of separation with our trade. So it's an art, a skill, really cool stuff, and allows us to potentially take a small risk for a large payout. Then finding strategic setups is key. And this is something that's very learnable and very doable. So don't be intimidated by that. This is something that people can get good at. And it's great because it does not require a high degree of emotions. It's usually a very logic-based exercise, if you will. Now, the code here in TradeStation, this is what you can use. Very simple. We're looking to buy next bar. This is a buy strategy, quantity buy contracts at the highest high. That's pre-written formula plus 1 point stop. So I not only want to buy at the highest high, I want to add 1 point or 1 tick. In TradeStation, a point is a tick, smallest price increment stop. Sell next bar. Sell is actually connotation, or has a connotation of exiting my long position. It's not actually initiating a new short position. It's not stop and reverse. This is selling out of my long position. So buy means buy entry, new long position. Sell means exit my buy position. So this is the code for a buy strategy. This is the code here for a sell strategy. All right, so sell short is what we want to use. Next bar, QTYS, contracts at lowest low. That's the formula we use to calculate the lowest low, minus 1 point stop. Again, I like to see a breakout through that level. And then buy to cover is at the highest high plus 1 point stop. Buy to cover is exiting my short position. Sell short is a new short position. That's the terminology there. You can use this code. If you need help translating this onto your platform, reach out to us and I can put you in touch with some developers who are very inexpensive who can do the programming you need for your platform. All right, you can take this code and do that for you. Now, strategic setups. The best setups typically involve a confluence of 2 or more valid technical indicators or analysis patterns. And there's really an art to finding setups, and that can be very cheap. It can be learned. That skill can be developed. So don't be intimidated by that. Now, I'm going to use an example of a setup I called out in one of the workshops I did recently. So this is something where I'm not going back and saying I would have witnessed this. I did call this out. So this is recorded in front of hundreds of viewers. So I've got plenty of witnesses on this. I said that this bar right here, this one daily bar, was very bearish for the euro currency. And in addition to that, it was right up against a weekly trend line. You can't see that here, but just take my word for it. Prices butted up against that. So weekly, I was bearish. Daily, we had a very bearish value bar pattern. This area in the box had not happened yet. That was the future. So I identified this setup on a daily and weekly basis. Now I'm going to drill down to a shorter term time frame. So first I want to find strategic trade setup on a longer term time frame. I did that. So second, excuse my phone here. Second thing I want to do is I want to drill down into a shorter term time frame, and that's what I'm doing here, and then see if I can hone my setup even more. So right here, you'll notice that our first setup really essentially closed right here in this bar. That's the one period. You can see the period lines right there. And then this is the next session right here. So I'm drilling down to 240 minutes, and I see that prices come up. But notice my momentum histogram is weaker here compared to point number 1. So I see a decline there, which is exactly what I'm looking for. And this significantly overvalued. The upper red portion of this price bar right up here is where I'm looking to be strategic. So that's a setup within a setup. And this again, the bars to the right here were the future. That hadn't happened yet, but I was predicting that this would happen. So now I've got a weekly setup, a daily setup, and even a 240-minute setup within a setup to really fine-tune my entry here. Next thing I'm going to do is I'm going to apply a breakout strategy. Now, we talked about the idea that I'm not going to use symmetrical numbers. This is 25 bars to the upside, 25 bars to the downside. We don't need to do that. We actually can leverage an intelligent breakout, the idea, the information we have that there's a higher probability of a sell-off happening. And what we want to do here is we want to use a breakout sell parameter set that's much smaller than 25 bar look-back period to make it much more reactive. All right? So let's go ahead and talk about that. So tilt the odds in our favor. We want to do that. So skew the breakout parameters to more quickly buy if we're long, if we're bullish, or more quickly sell if we're bearish in the expected direction of price movement. This is critical. This is what makes the intelligent breakout great. So what I did here is I'm showing you an example of instead of 25, I'm going to use a sell parameter of 1 bar, very reactive. You can see that as I had the setup within a setup, I'm flipping the switch, turning this on, very reactive to get in. You can see the green line is my break-even line, and then you can see prices just really sold off here, which is profitable for us on the short side. Beautiful entry. The long, buying into the market would be the exact opposite of this. So great example here. And you can see that the breakout strategy manages the trade for us. It generated a sell signal, because a very reactive one, I should say. And then notice my breakout buy exit parameter is 10 bars back, so it's less reactive. So you can see that the red line right here hugs price. It's much more reactive. You can see how it follows price very quickly. But then look at the blue line. It's slower to follow price down. I want that, because I want to give the price movement and time to breathe and chop around and do its thing and in the direction that I want it to go. So I don't want to be too tight or too short with my exit parameter, because I want to have the ability to ride out a longer term trade. Now, taking this a step further, once I'm profitable, let's say I'm way down here and I'm about to get an exit signal here. What I can do is I can go and back out my exit parameter to something really big. Okay, so what I'm doing here now, you'll notice my blue line is really lagging up here. I changed it to 50 bars back on a 60-minute chart. So instead, I started with 10. Now I'm at 50. See how much slower this is to go down? The reason why I recommend doing this at times is because if you're looking for a situation where you can ride a much longer term trend, we drilled down here and got in with very low risk here. And our entry point, we have a break-even line up here. Now we've had prices fall off in our direction, which is great. Let's say I'm thinking the euro currency is going to head down for weeks upon weeks, and I want to ride out a very long-term trend. In this particular case, what you want to do is you want to lengthen your exit parameter. We started with 10 bars back, and you can make that 20 and 50, but you don't want to do that until you have a degree of separation. And essentially, when you do that, you want to make sure that the where you're at currently, the exit is pretty close to break even. You don't need to risk a lot there. So you don't want to do it when the exit's way up here above your break even. That's too soon, or your number is too big there. What you want to do is you want to do that once your prices have really fallen down here. We don't need to take this exit here if we don't want to, but now that we've had this exit line come down to close to break even, then it becomes a very nice, attractive scenario where we can take advantage there. All right, so that's how this works. It's a strategy of drilling down, applying the intelligent breakout strategically for a period of time. It has a shelf life. Setups have a shelf life, and then if we want to, we can expand our exit parameter and to where we're less reactive to get out in order to ride out a longer term price trend. All right, so risk a small amount for a large payoff. This is actually the monthly chart of the euro currency. Now, on the futures contract, you can't see it actually touch this trend line, but on the Forex, the cash contract, it actually went up and had a perfect retest. So that was part of my setup. That doesn't show it here in the futures, but again, that happened on the Forex, and that was part of my setup. And then I showed you the daily value bar in my earlier slide, and then the 240-minute setup within a setup, and then finally I flipped the switch, had a very reactive sell parameter at 1 bar, had a less reactive buy exit parameter at 10 bars, and that's how I managed that. So that's pretty much it in a nutshell. The intelligent breakout is really a terrific way to trade the markets, but it does require that you do some homework, develop the skill there, and especially focus on finding the setups. Those are key, okay, and you can do it. Now, I've had a lot of people come to me and say, or inquire at least, and say, okay, I want to learn this. I want to learn advanced strategies for this. And in order to meet that demand, I have created a workshop. You're going to love this. This is actually for next week. That's March 26th at 7 p.m. to 9 p.m. Eastern Standard Time. And this is going to be taking it to the next level. We're going to cover the intelligent breakout, really how to integrate that, and how to turn that, supercharge your trading with that. Go to www.valuecharts.com/pro to sign up. Now, what I've done here, ordinarily this is something I charge for around $300. I've made this $97. So it's a $97 workshop. And on top of that, I'm giving you a 100% satisfaction guarantee. If you're not totally satisfied that the workshop has added a tremendous amount of value to your trading, give us a call, no questions asked. We will give you a refund. I really don't think you're going to find that's the case, but I want to throw that out there anyways. Again, it's going to be March 26th, 7 to 9 p.m. The price is going to be $97, and it is satisfaction guaranteed. Go to valuecharts.com/pro. All right, and then here's some of the contents that I'm going to cover in that course. First and foremost, the hybrid trading rules-based approach, a new way to trade. We can even go beyond the intelligent breakout. Intelligent momentum can also be included in there. How rules-based logic can seriously help your trading. It's really amazing. I'm going to go over why that is, the psychology behind the trading, the process of price discovery in the markets, and the powerful negative impacts that has on our emotions. So that's going to be a great understanding of the theory part of this that I think you're really going to appreciate. The two key measures to watch, we touched on those already. When to turn strategies on. When you do that, Mark, and you're going to ask me, what are some of the setups you look for? I'll show you a few of them that we look for, but this is going to get you started. Methods designed to dramatically improve your trading results. That's the bottom line. That's why we are talking about everything we're talking about with the goal in mind of being, how do we make a difference? How do we really help trading results? How to skew the parameter settings. We showed you a little bit there. I'm going to show you some more advanced ideas on parameter skewing and control transfer strategies for your trades. The intelligent breakout is what it's going to be centered around, and plenty of trading examples, soup to nuts, start to finish. Again, go to valuecharts.com/pro. Satisfaction is 100% guaranteed. Look forward to having you there. It's $97, a little bit more than it would cost to fill up your SUV. So I believe you're really going to enjoy this. And I think that for many of you, this workshop is going to revolutionize how you trade the markets. It's going to be a very powerful addition to your current trading toolbox, and I believe you're really going to like it. So give us a call if you have any questions up here, or you can, again, go to valuecharts.com/pro, get signed up, and I believe you're really going to enjoy the content. So that's all I have for this webinar. Thanks for watching, and look forward to seeing you out there at the workshop for Intelligent Breakout. It's going to be taking things to the next level. If you've been to the Intelligent Breakout webinars in the past, I'm going to go over a lot more content. We're taking everything to the next level. So I really think you're going to enjoy it. And again, it's satisfaction guaranteed. If you don't find that it's really helped your trading, no questions asked, give us a call and we will refund your money. Thanks for watching. Good luck trading, and I sure hope to see you at the upcoming workshop on the Intelligent Breakout, taking it to the next level.